Get ready because the world of innovation never sleeps, and neither do we. ElectroDrive News is back, bringing you the absolute latest, the most electrifying updates that are shaping tomorrow, today. We're diving headfirst into a news cycle that's moving at warp speed, so buckle up, because you won't want to miss a single second of what's happening right now. From market shifts that are turning heads to groundbreaking advancements that promise to change the game, we've got it all. First up, a major player in the electric vehicle space is seeing some significant analyst action, with price targets shifting and ratings being reevaluated. What does this mean for the future of this automotive giant? Then, we're shifting gears to explore a truly remarkable piece of automotive engineering, a new feature designed to redefine safety on the road. After that, we'll be looking at how cutting-edge technology is influencing investment strategies, with a spotlight on some of the biggest names in tech and their analyst ratings. And finally, get ready for a development that's raising eyebrows and price targets in the EV market, as one analyst makes a bold move. Stick around, because this is ElectroDrive News, and we're bringing you the future now. Don't forget to like this video, subscribe to the channel, and hit that notification bell so you never miss an update. Market buzz: NIO shares experience significant drop amidst analyst revisions. NIO Inc. has recently seen its stock price gap down before the market open, closing at $6.58, and then opening at $6.38, with current trading at $6.15 on substantial volume. This downward movement follows a period of intense scrutiny and reevaluation from financial analysts, prompting a closer look at the company's trajectory. The electric vehicle manufacturer has been the subject of numerous recent research reports, reflecting a dynamic analyst sentiment. Barclays, for instance, revised its price target downward from $4 to $3, maintaining an underweight rating. In contrast, the Goldman Sachs Group upgraded NIO from a sell to a neutral rating, while also increasing its price target from $3.70 to $3.80. Mizuho adjusted its price objective from $4 to $3.50, also with a neutral rating. A notable shift came from J.P. Morgan Chase & Co., which elevated NIO from a neutral to an overweight rating, significantly boosting its price objective from $4.80 to $8. Morgan Stanley reaffirmed its buy rating on the stock. Currently, the consensus among analysts, according to ElectroDrive Newscom, is a hold rating with an average price target of $5.21, a figure that has seen fluctuations. Financially, NIO's market capitalization stands at $12.67 billion. The company's performance metrics include a P/E ratio of -3.75 and a beta of 1.2, suggesting higher volatility than the broader market. Its liquidity position is reflected in a quick ratio of 0.69 and a current ratio of 0.84, both below ideal levels, alongside a debt-to-equity ratio of 1.89, indicating a significant reliance on debt financing. Technical indicators show the stock's 50-day moving average at $4.67 and its 200-day moving average at $4.22, with recent trading above both averages. In its most recent earnings report on June 3rd, NIO reported an earnings per share of 45 cents, missing analyst consensus estimates of 22 cents by a considerable margin. Revenue for the quarter was $1.66 billion, falling short of the $12.46 billion consensus estimate. The company's financial health was further underscored by a negative return on equity of 286.45% and a negative net margin of 35.51%. Despite these figures, NIO's revenue showed a year-over-year increase of 21.5%. Looking ahead, analysts project NIO Inc. to post an earnings per share of -1.43 for the current fiscal year. Recent activity from institutional investors shows a mixed but generally increasing interest. Cantor Fitzgerald LP and Ethic Inc. significantly increased their stakes, while J. Goldman & Co. LP and Laird Norton Weatherby Trust Company LLC initiated new positions. Laird Norton Weatherby Wealth Management LLC also grew its holdings. Institutional investors collectively own approximately 48.55% of the company's stock, indicating a substantial level of professional investment. NIO Inc. designs, manufactures, and sells electric vehicles, along with e-powertrain, battery packs, and components, primarily in China. The company also engages in racing management, technology development, sales, and after-sales services, offering power solutions and other value-added services. This significant analyst activity and market reaction are certainly worth tracking. But before we dive deeper into market movements, get ready for a truly innovative safety feature that's set to redefine automotive protection. Revolutionary safety. NIO ET9 introduces industry-first rear collision mitigation. NIO, the premium electric vehicle manufacturer, is once again demonstrating its commitment to cutting-edge innovation with the upcoming launch of its latest smart system update, version 1.20, for the NIO ET9. This update, rolling out in stages to ET9 owners, arrives just months after the vehicle's delivery began in March, underscoring NIO's rapid pace in delivering enhancements through over-the-air (OTA) updates. The version 1.20 update is meticulously designed to bolster three critical areas: active safety, the driving experience, and cabin comfort. Central to the safety enhancements is the introduction of the Enhanced Rear Collision Mitigation (RCM) feature, which NIO claims is an industry first. This proactive system aims to significantly reduce potential damage from rear-end collisions. When the system detects the risk of a collision from larger vehicles approaching from behind, it activates the car's active suspension. Within a mere 0.7 seconds, the rear of the vehicle is automatically lifted by up to 50 millimeters, creating a crucial buffer zone designed to absorb and mitigate the impact of the collision. This innovative approach promises a new level of passive safety, turning a potentially severe impact into a much more manageable event. Beyond the groundbreaking RCM, the update also introduces Generic Obstacle Alert (GOA) and enhances passenger protection during automatic emergency braking (AEB) at low speeds, further bolstering the ET9's active safety suite. For drivers and passengers, the update brings a new Skydampen anti-shake mode. This feature leverages the ET9's full active suspension system, Skyride, to actively reduce body vibrations and shocks while the vehicle is in park (P) mode, whether caused by internal cabin activity or external forces. This ensures a more stable and comfortable environment, whether the car is occupied or not. The smart cabin also receives significant attention with optimized controls for frequently used vehicle functions and a host of other detailed improvements aimed at enhancing the overall user experience within the intelligent cabin. Looking ahead, NIO's Vice President of Product has outlined plans for the second half of the year, with the team heavily focused on developing and testing version 1.30 of the smart system. This next iteration is slated to debut with the latest NIO ES8 shipments by the end of September, with ET9 owners expected to receive a compatible version following regulatory approval. NIO Inc. designs, manufactures, and sells electric vehicles in China, also producing e-powertrain, battery packs, and components. The company is involved in racing management, technology development, sales, and after-sales services, offering power solutions for battery charging and other value-added services. This advanced safety technology is a game-changer for driver confidence. But how is the broader tech and investment landscape reacting to these kinds of innovations? We'll explore that next. Tech Titans and Analyst Pulse, navigating Microsoft, Marvell, and NIO in the AI era. The intersection of artificial intelligence and stock market performance is creating a fascinating dynamic, with analysts closely watching tech giants like Microsoft, Marvell, and NIO. This period is marked by significant analyst activity, shifting price targets, and evolving ratings as investors try to capture the AI revolution's momentum. Microsoft, a consistent leader in the tech sector, continues to be a focal point for analysts due to its deep integration of AI across its product ecosystem, including Azure, Office 365, and its investment in OpenAI. Analysts are closely monitoring its cloud growth, the adoption rate of its AI-powered features like Copilot, and its competitive positioning against rivals. Recent reports suggest a generally positive outlook, with many analysts reiterating buy ratings and maintaining or increasing price targets, citing Microsoft's robust cloud infrastructure and its strategic advantage in embedding AI into enterprise solutions. The company's ability to leverage AI to enhance productivity and drive new revenue streams is a key theme in current analyst assessments. Marvell Technology, a semiconductor company, is another key player in the AI narrative, particularly noted for its custom silicon solutions that are crucial for AI data centers and high-performance networking. As the demand for AI infrastructure surges, Marvell's role in providing the foundational technology for these advanced systems is becoming increasingly critical. Analyst sentiment here often focuses on the company's revenue growth potential driven by AI chip demand, its market share in key segments like data center and automotive, and its ability to innovate in a competitive semiconductor landscape. Reports indicate a cautiously optimistic view, with analysts evaluating Marvell's capacity to capitalize on the long-term AI hardware trend. NIO, the electric vehicle manufacturer, also finds itself analyzed within the context of technological advancement, though its primary focus is on EV innovation and market expansion. While not a direct AI hardware provider like Microsoft or Marvell, NIO's integration of smart cabin technology, autonomous driving features, and advanced battery management systems relies heavily on sophisticated software and AI algorithms. Analyst reports on NIO often weigh its technological prowess against production challenges, market competition, and financial performance. Recent analyst actions, as previously detailed, show a divergence in opinion, with some maintaining hold ratings while others see potential for significant upside, reflecting the complex factors influencing the EV market. The company's ability to execute on its technology roadmap, including OTA updates and new vehicle launches, is paramount for analyst confidence. The broader market sentiment towards these AI-influenced stocks is generally bullish, though with varying degrees of risk assessment. Investors and analysts are keenly aware of the potential for rapid technological shifts and the intense competition within the AI space. The performance of companies like Microsoft, Marvell, and NIO is seen as indicative of broader trends in technology adoption, infrastructure development, and consumer demand for intelligent solutions across different sectors. Analyst ratings and price targets are constantly being updated to reflect new product launches, competitive dynamics, and macroeconomic factors. These insights into tech giants and semiconductor innovators highlight the pervasive influence of AI. Now, let's circle back to the automotive sector for a specific stock adjustment that's caught our attention. Analyst upgrade: Mizuho boosts NIO price target significantly. In a notable shift for the electric vehicle sector, Mizuho has revised its price target for NIO Inc. NYSE, NIO, raising it from $3.50 to $6. This adjustment signals a renewed, albeit cautious, optimism from the financial research firm regarding the company's future market performance. The upgrade comes amidst a complex landscape for NIO, which has seen varied analyst ratings and fluctuating stock prices. Mizuho's new target of $6 suggests a potential for a slight downside of 1.88% from the stock's current trading price of $6.12, indicating a neutral stance with a raised valuation expectation. This move by Mizuho adds another layer to the ongoing debate among analysts about NIO's valuation and growth prospects. This revision by Mizuho is part of a broader series of analyst actions concerning NIO. Morgan Stanley recently reaffirmed its buy rating on the stock. The Goldman Sachs Group upgraded its rating from sell to neutral and increased its price target from $3.70 to $3.80. A significant bullish call came from JP Morgan Chase & Co., which moved from a neutral to an overweight rating, substantially raising its price objective from $4.80 to $8. Conversely, Barclays had previously cut its target price from $4 to $3, maintaining an underweight rating. This diverse range of opinions highlights the challenges and opportunities that analysts perceive in NIO's market position. According to data compiled by ElectroDrive News, the consensus among investment analysts is a hold rating, with an average target price of $5.83, reflecting a blend of cautious optimism and performance monitoring. The distribution of ratings includes 1 strong buy, 3 buy ratings, 8 hold ratings, and 1 sell rating. NIO's stock recently traded down 47 cents during midday on Wednesday, reaching $6.12 on a trading volume of 55,527,313 shares, slightly above its average volume. The company's market capitalization is approximately $12.76 billion. Its financial metrics include a P/E ratio of -3.77 and a beta of 1.2, suggesting higher volatility. The 50-day moving average is $4.67, and the 200-day moving average is $4.22. NIO has a 52-week range of $3.02 to $7.71. The company's financial structure shows a debt-to-equity ratio of 1.89, a current ratio of 0.84, and a quick ratio of 0.69. In its latest quarterly earnings report on June 3rd, NIO posted an EPS of 45 cents, missing the consensus estimate of 22 cents. Revenue for the quarter was $1.66 billion against an expected $12.46 billion. The company reported a negative return on equity of 286.45% and a negative net margin of 35.51%, though revenue saw a 21.5% year-over-year increase. Analysts forecast NIO to report an EPS of -1.43 for the current fiscal year. Hedge funds and institutional investors maintain a significant presence, with 48.55% of the stock owned by these entities. Recent activity includes substantial stake increases by Trilogy Capital Inc. and HSBC Holdings plc, new positions by Ping Capital Management Inc., and AccuVest Global Advisors, and boosted holdings by American Century Companies Inc. NIO Inc. operates in the electric vehicle market, designing, manufacturing, and selling vehicles, as well as e-powertrain, battery packs, and components. The company also provides racing management, technology development, sales, and after-sales services, alongside power solutions and other value-added offerings. This targeted analyst adjustment highlights the dynamic nature of market valuations. That's all the updates we have for you today. And that's a wrap on today's electrifying news. We saw NIO shares experience a significant drop amidst analyst revisions, but then a surprising price target raise from Mizuho. We also explored NIO's innovative ET9 with its industry-first rear collision mitigation feature. Plus, we took a look at how AI is shaping the stock market, focusing on giants like Microsoft and Marvell. Don't miss out on future updates. Make sure to like this video, subscribe to ElectroDrive News, and ring that notification bell. Hit us up on our socials and let us know your thoughts in the comments below.